All right, ladies and gentlemen, let's get started. My name is Fausto Pugliese, President and Founder of Cyber Trading University. I'd like to thank everybody coming here on Closing Bell. And look forward, we have a new featured guest today that we have, Nigel Hawkins, Founder and President of Hawkeye Traders. And before I do a quick intro, I want to just talk about and see how everybody did today. I know we have some familiar faces back. Hopefully everybody had a fun, exciting week in the market. Looks like we have a nice little big rally lately. Market's been up substantially yesterday, up a little bit today. You know, looks like we're going to be testing some of those lifetime highs on the Dow. Now, for everyone here, just let everybody know that we run Closing Bell once a week, and we always bring a featured guest. And today's guest is the first time we're having him on Closing Bell. As you know, we always like to bring guests come on at least once or twice a year. And we've been doing Closing Bell. I think this is our probably our 5th year doing Closing Bell. So we've been excited, and you guys have been helping out a lot being in here. But in the meantime, let me just do a quick little intro about Nigel. I mean, I was fortunately had an opportunity to meet him a few times on some webinars that we've done in the past, and I thought he had a very good product and was very, very well spoken. And you know, I heard a lot of good things about him and thought it'd be a good idea if he came on Closing Bell to share his ideas. He's very good with Forex market, talks about stocks, options, bonds, does a lot of coaching. You know, he began trading back since 1996, just before the crash of 1987. But you learn a lot by being in these situations, because I've been through these situations back in 1997, been there since 2000, 2008. So these are great tools that we've learned that we get to share our knowledge with you. He's also been an investor and a great entrepreneur, just to let everybody know, and help pioneer a lot of the popular methodologies of volume and expanded suites regarding certain tools and indicators over hundreds of traders throughout the world. So he'll tell you a little bit more about it. He's going to go on for about an hour. And just to send everyone also a quick reminder, we have Greg McDermott from Cyber Trading University. He's going to be doing an event at 8 o'clock this evening, which all of you are welcome to join. So don't forget to not miss that opportunity tonight. You know, we have a lot of big events that are going on Tuesday. But once again, after this event, don't forget to join us at 8 o'clock tonight with Greg McDermott from Cyber Trading University. And he's going to talk about options, Forex, and some swing trading. So without further ado, I don't want to take too much time away from Nigel. He's going to go on for about an hour. I'd like to welcome Nigel here, and everyone give him a round of applause. Nigel, the stage is all yours.
People can hear me.
Loud and clear, Nigel.
Okay, Fausto, thank you very much, and thank you for your invitation today, and good afternoon, everybody. You can probably hear from my accent that I'm a native Texan from London. I'm English, that's where I live, that's my home, but most winters I try and get over here. I've been down in Palm Beach since January the 5th, and I'm on my way back to England on April the 2nd. Let me just first of all tell you and answer a question which I get asked all the time, and which is going to be in your mind. If what I'm going to show you today is so good, what the hell am I doing sitting here discussing it with you? There's a very simple answer. I enjoy it. And it is as simple as that. You know, trading is a very insular business, and most of you turned the spare bedroom into a trading room. And if you want to be by yourself all day and in the evening by yourself, you can do very easily. Before I got into trading, I had a business with over 300 people working with me. And although I liked trading when I first started, thinking that I never have to employ anybody again, I miss the human interaction. And Hawkeye started just by chance. I trade full time. Most of my trades are longer term. I hold most of my trades for 3 weeks, sometimes up to 3 months. I trade Forex on the 480-minute, 960 daily, and I trade my major markets, which are the commodity markets and some stocks, on daily, weeklies, and hold them for substantial amount of times. But I got asked to trade money for people. I live on an island between England and France, and I said, no, but I'll show you how to trade. And out of that, a broker found me, and on it went, and super charts had just come out with TradeStation, and I said, well, I think we can sell you this stuff. So that's how it all happened. It was never a business that I set out to do. I've got many hundreds and hundreds and hundreds of traders worldwide who benefit from the unique volume algorithm, which I call Hawkeye volume, which I have to tell you, I'm very proud of. I think it's my legacy. I'd like people in 30, 40 years' time to remember me in the same breath, how honored I would be as a Elliott or a Wyckoff or a Gann, etc. So without going on, I'll tell you my journey. This is very much, I don't want this just to be a PowerPoint presentation that's boring as hell. What I want you to do is type in any stocks that you want me to look at, any symbols, just type them in. And the best way to show how volume works in market is not on a PowerPoint by looking at live charts. So that's what I'm going to do. I've just set up my workspaces to be able to do that with you. So let's move on. First of all, we've got the normal disclaimer. If anybody's unhappy with that, please leave the room. I'm not licensed to give trading advice, and nor do I wish to do so. So if you're unhappy with that, please leave. By staying, I assume that all of you accept this disclaimer. So let me just take you through the agenda. I'm going to give you a short introduction to volume, the application of volume, and then there's going to be closing thoughts. We've only got an hour, and I've got to really rattle through a lot of stuff. Right at the end of the presentation, there is a special offer for you on the volume that I've pulled alone, and that will be offered to you at the end of my presentation in closing thoughts. And of course, there'll be lots of questions. Type in questions to me. If you don't type in, I talk, and I don't think I educate you or show you the best to get out of this algorithm. So, traditional trading, you know, 70 to 80% of traders are failing. And they're failing because they're using, in my opinion, traditional trading strategies, MACDs, stochastic, Bollinger Bands, Elliott Wave, the moving averages, etc. And these strategies, again, in my opinion, don't work. I don't think they consistently work. And they don't work because they're lagged. All those indicators that you see, the MACDs, the Bollinger Bands, whatever they are, they're all lagged. And that's why volume is so important. It is the only leading indicator. It signals price movement before it happens. It signals the market intent. And all other indicators are lagging. And I can show you this time and time again when we come to show charts, and you'll be typing in symbols that you want me to see. So we'll come into that later. And the real key is volume on triple time frames. When you actually, and I call it forensic analysis, not technical analysis, you are trying to be a detective on volume because you're trying to find price move. I don't know whether many of you have read W.D. Gann's work, but in his day, he was squaring prices with time. And of course, time was very important because it took time for news to travel across the continent around the world. New York, Chicago, Kansas City, San Francisco, Los Angeles, all had their own exchanges. It took time to travel. And he came up with something of squaring price and time. Now everybody sees everything immediately. The market jumps. There is not the attendant volume when markets jump, and if it isn't, that's why the market falls back, and that's why so many people are waiting for the first pullback to buy, to get in, because there wasn't enough attendant volume in the breakout. And if you're looking at over triple time frame, which I'm going to demonstrate to you shortly, you should have an aha moment. So let me just tell you how I became a trader. I had a very substantial publishing company, and that company had 16 magazines, 300 odd people. I sold that back in the 80s, and I invested a six-figure sum with a stockbroker, and I was very honored to be asked to be one of the directors of the British America's Cup team, you know, the big sailing race. Sailing is my passion. And when I got back from doing all that over lunch, he told me he'd lost it. And I thought he'd ripped me off, and I got all the cover notes. And in those days, it was before computers. I know I don't look that old, but, you know, I'm 65 now, and I've been doing this for 28 years. I started off on graph paper with a pen and was over the moon ecstatic when Radio Shack brought out a handheld calculator that you could do a moving average on. So that dates it, and you used to telephone the broker, and then he'd call you back with a fill. It was a long time ago. But I have to tell you, I was absolutely horrible. I was dreadful at trading the markets. And I just couldn't believe how stupid it made me look. I mean, we've all been pretty well educated, or else we wouldn't be picking up trading and coming in today to see my talk. But you know, you have to be a loser first. It's part of the entrance fee. And it's very interesting. I was reading something a couple of years ago in Sunday Times in London that electrical apprentices have the highest dropout of their apprenticeship. Something about 30–35% of electrical apprentices drop out of their apprenticeship program. And I thought, wow, that's the same as a trader. And they drop out because they get a belt from the electricity as they're learning how to do the wiring, and they become too frightened to actually go on and carry on to be an electrician. And that's also the same problem with a lot of traders. They can't get over the hump of the first losses. And then I see a lot of traders, and they nearly all fall into two categories of problems. One, they can't hold into a trend run, and that's because they are still frightened. They don't realize that they're trading probabilities. You're not trading right and wrong. You're trading probabilities. And you've got to try and be insular from your trading. You know, you're trading just probabilities and risks, that's all. And once you get over that, you can be fine. And the second problem I see is that most traders that I come across are undercapitalized. And because they're undercapitalized, they don't take advantage of these trend runs because they don't have the money to capitalize on them. So what did I do? After really being an awful, awful trader, and I was quite impressed that the broker took so long to lose the money that I lost, because I doubled that in about a fifth of the time. I thought I'd got to stop. I even reached the stage, guys, that I was trading gold back then mainly, and silver, that I thought that, my goodness, you know, I was so wrong, I started to trade the other way. So if my analysis said buy it, I'd sell it. And I've got to tell you, it worked pretty well for about 5 weeks. But of course, you can't do that. It just beats you up. So I thought I'd better go and see where the professionals trade. So it was obviously before Bin Laden had been around, and you could just walk into the stock exchange, which I did in London. And I went there. And I went there every day for 2 weeks, and I treated it as a job. I got there as the market opened. In those days, it actually closed for lunch as well. I went out for lunch with the traders, and I went out in the evening to the pub to really get to know them. And I found the missing link. The pit trader has an advantage. They have accountability. In other words, they work for somebody. You know, when we're working for ourselves from home trading, we don't have accountability unless it's to our partner, and we probably hijack or bamboozle our partner far too often anyway. You know, there is no accountability, but if you're working for a trading company on the stock exchange, you have to do stuff. You have to have an accountability. They also had free money, the bid and the offer, the spread. Well, we can't replicate that. But they could feel the market. They could feel the buying orders coming in. They could feel the selling orders going out. They could feel the market. And that is volume. And I thought, that's what I want to follow. And I then knew the volume is the key. So I started my journey on volume. Richard Wyckoff was the father, an American guy. He was the father, and if you want to understand more about how I started, Stocks and Commodities magazine have a fabulous little book for about $15 called Trading the Wyckoff Method. It's a great book, and if you're interested in volume analysis, that's the one to go and get. He traded in the 30s, studied volume and price. I traveled over to America. I found the family. They were down in Phoenix, and they had a small little photocopy printing business, and I managed to get the original course notes, put them in a U-Haul trailer, and shipped them back to England, and started to work through them. I'm sorry if I'm going fast, but I want to get to actual live charts because that's where everything speaks. And I discovered something. Normal volume spread analysis, as it's called, doesn't consider the open. Hawkeye's volume algorithm really considers the open as paramount. So standard volume spread analysis looks at the high, the low, and the close of a bar, and how much volume goes into that range of the bar. I look at the open, the high, the low, and the close, because we now live in an era where everybody sees the same data at the same time. It's very similar to an auction. You know, if an auctioneer starts off something at $100 and there are no offers, and he goes 90, 80, 70, so on and so forth, and it gets down to 20 and somebody puts his hand up, the price will probably run up to about 45 and peter out. But if he opens the price at 100 and goes down to 80 and somebody comes in and bids, it's probably going to run itself up to 140 or more. So the open sets the bias for the session. And once you know the bias for the session, you're going to be okay. So the application of volume, I'm really going to start to show you now. And what I'm going to do is go over to my charts and show you in TradeStation the Hawkeye package indicators are available in TradeStation Ninja and MT4. E-signal will be put on within the next few weeks, followed by multi-charts, followed by Metastock, etc. And we are looking at seeing ways of trying to get into Ameritrade, etc., etc. But before I show you the actual setups that I look, I just want to explain very, very quickly to you what you're looking at. And this will only take a moment. This indicator here is the Hawkeye volume indicator. It does over 300 calculations per bar. I don't want to bamboozle you, but it looks at the standard deviation between the open and the high, the standard deviation between the open and the close, the standard deviation between the high and the low, the standard deviation between the close, the high, the open, and the low, and then it looks at volume that goes in, etc. Does over 300 calculations. And what I've done, I've weighted them to look back over 20 bars and group them in fives. So there are 4 groups of weighting that we look at. We look at one weighting, 20 to 15, 15 to 10, 10 to 5, and then we go bar by bar. A market is a very logical thing. A market is a market. It's logical. It goes through phases. It goes through accumulation at fair value. It then goes through price move till overvalued. It then goes through distribution, return back to fair value that in an uptrend should be higher than the previous area of accumulation. Accumulation takes place and off it goes again. And what I want to show you is here and I'll go through any stocks that you like. I don't want you to think that I've just pulled up stocks that show how wonderful I am. I'd like to show you where it doesn't work as well. But you can see here, I look at daily, weekly, and monthly. My first analysis goes off and looks at the monthly. Now, the crosses and the dots on the price is the Hawkeye trend. And this is the volume here. And the trend, I have at 3 speeds, conservative, normal, and aggressive. And this down here is the heat map showing me what all 3 trends are doing. When it goes a dark color, it tells me that 1 or 2 of the downtrends here have clicked out, and then goes bright green telling me that all trends have clicked in, etc. So my analysis, and this is on what's in Netflix, goes like this. Here is my volume, and you can see that we've been in a downtrend here. 1, 2, 3, 4 months before we get the price move, we get green buying volume here, green accumulation volume. The market is being accumulated, so the bias is to the upside. So that first bar of green volume is very important to me. And the other thing I want you to notice is that I have the trend as a dot, because at this point here, you probably can't see, let me just expand that a wee bit. The dot actually goes flat. And that tells me that the momentum of the downtrend has dissipated and buying is coming in. I then look at my next time frame, which is weekly. Now, what I'm showing you can work on a 1 minute, 3 minute, 6 minute chart, or a 1 minute, 2 minute, 4 minute chart. It really doesn't matter. It's the same principle. So we come up here to our next chart, which is the weekly. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and here's that big dot, which is telling me to buy it. That's a volume entry signal. I got 10 weeks of accumulation that goes on here, okay? And then, of course, I come over to my faster time frame, which by nature is always going to be whippy. And remember what you're trying to do with price. You're taking random price, you're smoothing it into a time frame, whatever that might be, a 1 minute, a 5 minute, and then you're overlaying indicators to smooth the randomness of that vibration. So that's how it works. I've just seen a question coming, are these usable for Forex? Very much so. I'll show you Forex in a minute. That's my main market that I trade, because we use tick volume that runs into time charts, and it's very, very effective. I'll show that in a moment. So we now come over to our daily chart, and you can see that our daily chart gives us a buy here, that big cyan dot. We know that we've got green volume, and we know that the trend is dissipating on the monthly, and we know that we have got over here green volume, 2 bars of white neutral volume showing me price accumulation. So that's selected, and you can get in that, and so on and so forth. Up it goes, up it goes, up it goes. And then now we get to the top of the market, and we come into the top. And what is happening here, is that a downtrend, or is it a termination of an uptrend? We have a sell signal in here, and we now have to look at our other time frames to see whether it's elected. First of all, on my slow time frame, I have green volume. On my middle time frame, my weekly, I do have 1 bar of red volume last week. This is not elected. It's a termination of an uptrend if you were trend running it. So that is how I look overall over stocks on a daily, weekly, or a triple time frame basis. And I've set this up for you before this presentation that I can come into your fast intra time frames too. I just want to show you also the person who asked me on Forex, how does it work? It works exactly the same on Forex. Now, I know this looks a bit jumbled, so let me just show this to you quickly. This indicator over here is called the Hawkeye Fact Man. And what I do here, I take every symbol, divide them, weight them, run the volume and the trend algorithm through them. And that tells me each color is a currency, which ones are overbought and which ones are oversold. So, for example, the green here is the euro and the yellow is the Canadian. You're only trading risk. That is the pair that you should be in, along with the pound going down, which is the brown line, and that is the Canadian going up. And then I run it across here, and I have my 5 minute, 10 minute, 20 minute, whatever. And that gives me the setup. So if I wanted to look at the pound Canadian, I put that up, and you can see that at that point there where we were getting weakness, it showed that this market, had you been long, the market wasn't going to go on any further. It didn't give us a sell, but it just showed you that the market went into congestion. And remember, a market can only do 6 things. It can only trend, trend pause, have congestion entrance, congestion, congestion exit, and trend reversal. And that is very important that you know that. And if you take advantage of the offer that I'm going to give you at the end of this presentation, we're going to run a 2-hour seminar on a Saturday morning at 8:30 Eastern time. Randy, just type in the date for me so I can see it, please. And I will show you how to time volume to the 6 ways a market moves, and it becomes very, very powerful. So that's what I do. And then, of course, in TradeStation, you have all these numbers down here, and this shows you how long each currency is in a trend for. So it just tells me, like, when a new trend comes up, it'll immediately tell me, look, bang, there's the new one. It's just telling me, Randy, can you type that in, please, into the chat box to me, so I can see our date for our 2-hour seminar, please? Oh, I got it. Saturday, March 29th. Thank you. So if you do take advantage of this offer, it also comes with a 2-hour mentoring session with me on the 29th of this month, 8 a.m. till 10 a.m. Eastern. So you can see that this pulled in a 1 long. Am I interested? Well, I'm long on my 20 minutes. I have declining volume on my 20, but no, it's not elected. It's the termination of this downtrend. So that's how the volume works. But the most important thing to understand is the accumulation and distribution of volume. Look, here is the market still coming down with conventional trend following average true range indicators. But look here, 1, 2, 3, 4, 5, 6, 7. 7 bars of 5 minutes, 35 minutes before this came in, this market was being accumulated. That should be the aha moment for you guys, because no other indicator out there gives you the heads up before the market moves. It is the fingerprint. It's the DNA of the market. It's taken me thousands of hours to do this, to make this algorithm. And frankly, if I hadn't sold my business for a lot of money, and I wasn't married at the time, I had the money to learn it, and I didn't have any family responsibilities, I could spend hundreds of hours on developing this indicator. So there it is, showing it to you on Forex. Now, I want to come to stocks, but one of the things that I'm really, really proud of is this here. And I don't know how many of your platforms, I've just got to turn this off, how many of your platforms allow you to do tick data. But tick data is absolutely, it's a revelation when it comes to intraday trading, whether it be for stocks, commodities, Forex. It really is the leading edge. And I invented an indicator called the gearbox and gear changer. And it took me 5 years and 3 programmers to do it. It just seemed ridiculous to me that every day you would trade the same time. Why would you trade a 5-minute or a 1-minute or a 3-minute chart day in, day out? It just doesn't make sense. Why would you trade a tick chart of a set amount of tick speeds day in, day out? The market has its own profile. And just like riding a bicycle, you hit a hill, you change gears. You go down, you put your brakes on, you change gears. And so this does it. And let me just show you how this works. So, for example, at the beginning of each day, this gives me the tick speeds that I need for the market. So this is linked to this, whatever this is, Penn, Virginia. It's telling me tomorrow that my slowest tick speed should be 416. It's telling me that my middle tick speed should be 408, 208, and it's telling me that my normal time frame, 104. Now, if I wanted to trade ultra fast, which I don't, it would be 52. Let's cover that up. And what would be interesting to show is that, you just copy that for a moment and put this up and paste it and make that a say a 1-minute chart, which I understand is one of the popular numbers. Okay, there's the 1 minute chart that came in back here. Here is the tick chart giving me exactly the same, but without that volatility that comes in. It smooths some of the volatility. It takes me down, and down the bottom here, you can see again the accumulation volume coming in. No demand, no demand. There's the buying volume, yes, and the trend goes, and up it goes here. It just gives a smoother ride, and it also gives me the termination of the uptrend here, whereas the 1 minute doesn't. And if you go out to 3 minute, it'd be interesting to look at that. You can see that it's far superior the tick speeds, and that probably over here would be the equivalent of the 3 minute coming down. So far superior. It gives you the DNA each day. And not only that, you can see that it's linked underneath to a color. So each chart of mine has a blue, a yellow, or a red. And all during the day, it's saying, trade this time frame, trade this time frame. So over here, it went blue, and it's telling me, get in on the blue. So I get in on that time frame there. Then it goes yellow. So I want to keep my trend going on my yellow. And then it comes down here, and you can see we then go blue. It's taking me into my blue, but the yellow has already gone back here anyway. So it took you in. It gave you a termination of the down. You saw the accumulation volume come in, and it would have got you in on that gray dot there, which is the aggressive entry after this one. So that shows you on that. Just before I started, I asked your hosts to tell me the ones that had most of the business today, and this is what they all came up with. And you can see that I can just change these tick speeds to whatever I like, and it gives it to me for tomorrow. So let's look at that one. I mean, it looks, so we're 800 on this one. So you can see that each stock has its own DNA. It has its own tick fingerprint. And if you have it, I've got to tell you guys, to me, it's the whole advantage, and you're off. So again, you know, I'm trying to show you something in an hour and take your questions, which normally would take me 4 hours. But you can see the fast time frame. We're in here. It's on the blue. It's telling you to go. You then look at that. You then look at your other time frames, and you can see we're still in uptrend on our 800 tick. We've gone into white. My algorithm paints the congestion. So you're not expecting this to go far. But that's hindsight. You didn't know that at the time, and you would have taken a short on that because you didn't know at hindsight. But you know that you're taking on risk. And as it progresses, you can see over here on the faster tick speed, it's not coming out, and bang, in it comes. Roadkill. Why do I call it roadkill? You know, vultures just sit on the telegraph poles waiting for roadkill. They don't fly around everywhere. And there it is there, bang, and off it goes. So it just tells you. Let's have a look at the most widely held stock in America, which is Apple. And again, this tells me tomorrow what tick speeds to do. 1304 for my slow time frame, 652 for my middle, and 326 comes in. There's the beginning of the day, the dotted line. We were in yellow virtually the whole day. Whoops, sorry. We were in the yellow speed the whole day virtually. Okay, from there, and it just kept you in this lovely trend run for the whole day, which was in harmony with the slower time frame. And if you look at the volume, you can see that the volume accumulation was coming in all the time, and that large bar there was a volume, big order came in there, unless it's corrupt data, which it could be, I don't know. TradeStation corrects itself overnight on corrupt data. It could be corrupt data or a big order that came in, and that's how it pushes itself up. Now, I know a lot of you don't have the ability to do tick charts, so let me come on to time charts and show it to you on time charts. And again, I've set this up at real quick times, 1 minute, 2 minutes, and 4 minutes. So let's just go through and have a look at these. And see how they set themselves up. You know, again, we come in here on the 4-minute. You can just see the volume is in solid uptrend all the way through the day on the 4-minute. We come into Netflix. Let me just try and find the beginning of the day. Well, it's just so much data. You can see that you're running up and down. And if I showed you that against the tick charts, you would really have the aha moment to understand the tick charts are far greater. And then I wanted to show Twitter. Okay, so there we go on Twitter. Just come in, etc., etc. So it works on the faster time frames. You can see here's Twitter on a 1-minute. Look at the accumulation that started. 1, 2, one bar, a red selling test, 3 neutral, another test, 4, 5, 6 bars, 6 bars of accumulation volume. 6 minutes of accumulating volume came in before that big move that came up in here. This is powerful stuff. And here it is over here coming in on the 2-minute. And you can see the accumulation also that came in on the 4-minute. And it happens time and time again. And you really need to have volume in your arsenal because it just keeps you safe. And as I said earlier, we are but only trading risk. You know, and that also comes into, I showed tick speeds. I'm just switching over quickly to Forex because I know we've got Forex people in here. So this is a 3-minute chart. Let me just make this 5 minutes. And let me just put up that one, for example. So you can see, even on 5 minutes, look, 1, 2, 3, 4, 5, 6, 7, 8 bars of selling volume before price move. And you went from 87.50, you got about 40 pips out of that move. That's what the power of volume does. And then if I come back and show you the top stocks, and then I'll start taking some questions. Before I do that, I just want to show you what I trade mainly. And I trade a lot of commodities. And I don't know if any of you even ever look at live cattle, but your steaks are going to become very expensive soon. I love trading the softs. Look at coffee. You know, with what's happened down in Brazil, a very dry drought they've had, rather like what they had in California. Look at the price move on this. This is serious dough. Sugar. Look at this. Look at this trend run down on daily. Up. Going into its accumulation phase, distribution of volume, expecting this to return. You know, if you learn this stuff from us, I promise you, it'll be the weapon that you really, really want, along with money management in your arsenal. And I know there are people who trade the E-minis. This is the E-mini that sets us up each day, the correct tick speed. It tells me day in, day out. So tomorrow we're trading the 5864 tick. But look what it did today on our slow time frames, you know. And this just happens time and time again. And we have many, many users worldwide. And it takes them about 3 to 6 months to really get a grip on this and to understand it. Now what I want to do is go back to top stocks, and I probably should go to time, and I'm going to pull down my chat box, Randy, and what specific, are there any specific symbols that people would like me to see? Okay, let me just do the guy who did BAC. Could you give me an indication of the time frame, please? I don't know whether I'm showing fast intraday time frames, or people want me to go slower, Randy. But let me do BAC first. Well, I wouldn't even look at that stock. It can't be right. QQQ. Again, this is very fast. So when you're QQQ, which is the NASDAQ shares, you're going to get a lot of chop at this speed. So let me put it on what I would consider to be the right speed to a trade. So let's go out of 5 minutes, and then you'd look at 10 minutes and 20 minutes. You know, one of the things that I see most talking to traders who come to me around the world is that they do trade the wrong time frame. Trading a fast time frame, and I understand that you trade 1 minute against dailies, which makes a lot of sense. But traders do trade the wrong time frames. You know, fast intraday trading is extremely skillful, and I rather make it the analogy rather like riding a horse. You start on a pony, then a nag, and a slow horse. As soon as you go to a 1 minute or anything fast under 5 minutes, you know, it's really like trying to ride a racehorse in the Kentucky Derby, and there are very few people who can consistently do that. The person who says ISIS over 1 month, are you looking at a monthly chart? Well, let me just put that in. So ISIS, and we'll see what that brings up. And I can make this chart quickly, this one here quickly, a monthly chart, and then I'll put it back to 20 minutes. So there it is there. And if you wanted a better example, thank you for asking me. There is the accumulation. 1 month, 2 months, 3 months, 4 months, and on the 5th month, the buy came in. Trend went, the heat map, all 3 trends clicked in, the volume was there. Then you had some testing volume, and the market came back. But then no demand volume came in, so that was a volume test bar. If you read Wyckoff, it's a volume test in an uptrend. Market's being tested, and that little bar there is the secret that we teach. There it is there, neutral volume accumulation, buying volume, breakout, and up you go. So that's a great example. Whoever asked me that, thank you. CTI. CTIC, is it? Okay. Didn't happen. CTIC. Need just to get these charts back here to see this. Haven't got enough data for it. Let me just see if I can get some longer data to come in on this 5 minute. For the people who do trade Forex, TradeStation offer a pretty sensational deal. They offer, no, it was $500. Let's make it at 700. They make, just for Forex, if you have, oh, there it is on 500, horrible. 5 minutes. If you have it on with TradeStation, if you open an account for $2,000, they give you the platform free. And if you open it for $5,000, they give you all the stock, the options, and the commodities. So that is a very good example showing you the accumulation. Let me just turn that to a weekly as well. So you can see there's the weekly accumulation coming in as well. You can see that. right at the bottom. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, 8 weeks accumulation of volume. Boom, off it went. Very powerful once you learn this, and that shows you that market move. Another stock being requested, BI. Somebody's asked me MTOR. Here it is here. Again, you can see there was a test that came down on the month. Oh, that's weekly, sorry, on the monthly. You can see that it came down, and we had the accumulation volume coming in here, stopping volume in the downtrend, no demand, no demand, selling test. Look at the low volume, ultra low volume. Markets don't go down on ultra low volume. Then the accumulation came in one month, second month, bang, off it went. Okay, so let me come out and show you top stocks in daily, weekly, monthly, so that you can get a feel across the board on all of them. So that MTOR, there you can see that the bias is to the upside, the accumulation on the monthly, uptrend on the weekly, accumulation price test here. You could have had that short that came in on the daily, and then it bangs itself out, test again. That was not a short there. Why? Because the weekly is going up. You can see the weekly volume. It's a profit take. It tied itself back into the market, the overall, probably S&P or the NASDAQ for that one, and then the New York Stock Exchange. Then it went on its way. And you can see right now you're getting distribution coming in on this on the daily. Look, 1, 2, test, 3, 4, 5, 6 days of distribution volumes gone in at the top here. Now, that isn't a closeout. That's a close of the trend, uptrend. It isn't a short. Why? Because we don't have weekly volume telling us what it is. Now, we can do something rather clever with this indicator here. This is my roadkill indicator. I can say, okay, make that for me 3 days. So I can say 3 days, and I can see that here is the volume. Although I look over to the weekly, I got weekly volume. Down here, a weekly volume is positive. Down here, the roadkill volume on 3 days is negative. We do not include the roadkill indicator in the offer that I'm giving you at the end of this presentation. The indicator that you have the opportunity to get is this volume indicator here. And that also comes as a paint bar, so you can have it on your price as well if you don't like it underneath. PBI. If you want to see more of us in action, if you go to HawkeyeTraders.com, and Randy, would you send that link to everybody, HawkeyeTraders.com, you will see under our training rooms, we have a free room every Wednesday where we show you the indicators in depth and trade the market for you every Wednesday. That's absolutely free. And there is the link for you for that. So PBI, let's look at this. Well, you can see again, you had 1, 2, 3 test, 4, 5 months of accumulation down there. Price came out. We're in an uptrend on price on PBI. Pitney, I see, Pitney Wells. You can see that the weekly is long from this big cyan dot here. So it's been long since April of last year. And you can see that the vibration, the faster vibration, the daily has been up and down, but you would not have taken one short. It did not allow you to go short. You could only take longs into this market move. And that's what I say, you've got to learn how to trade risk. And the more I look at stocks, you know, the weekly, monthlies are very powerful. You come down to faster time frames and they become whippy. but I understand that people do need to trade intraday. If you can get it on tick data, so much better. If you can't, try and go out to the longest tick speed that you can take. Randy, any more? I haven't got the NASDAQ set up, but there'll be very little difference from the NASDAQ than from the S&P. But again, if that person who likes to see the NASDAQ future wants to come in, I'll see if I can open that quickly, by the way. I've got it here, but it probably hasn't been set up. Let's see if I can just find it very quickly. Let that open once that's open. There is the NASDAQ, and again, we have our tick speeds to be able to show this, and that'll come up in a minute. We also have the VIX. You can see that we can run our trend algorithm through the VIX. Remember, it's reverse, so when it's going up, it's now I've reversed it on the VIX. I beg your pardon, and this will give me the tick speed. Just copy this across, and that will show you again on this one. And now I can just make this the at nq.d, and that gives me my tick speeds for tomorrow. So let's set those up as though it was today. So that would have been 2448. My middle time frame is 1224. My back to front here, sorry, 612. My slow time frame is 2448. And my middle time frame is 1224. That's what it gives me for tomorrow. Wouldn't have been far out from today. And there you can see that the only way you could have traded the NASDAQ was on the long side. It gave you the long all the way through. And that is, again, the power of tick and the power of volume. You can, again, see the accumulation coming in down here. And if we go to the start of the day, which is here, there is the accumulating volume coming in. There's our cyan dot telling the Hawkeye users that there's a volume to the upside entry, and off it goes. So that shows you the NASDAQ. Now, let me just try and find the chat box. I've lost the chat box. Let me come back. Randy, would you give me any more symbols that are coming in? And now I've really shown you enough of this, and I need to get back to my PowerPoint and just finish up here because we're virtually up to my time. So I just want to go through my closing thoughts. We've gone through the questions. My closing thoughts are the volume, this is a culmination of 20 years of research that I've done. It is a very sophisticated way of trading, and it really does give you the edge that you need the whole time. It shows you the trades in clarity. It shows you how to perceive the charts. Accumulation, price accumulation move, distribution, back down again is absolutely fundamental. And it will show you how you perceive the chart the whole time, show you how to place your trades. It'll tell you when to take profits. It'll tell you when to move your stops up. If you're in an uptrend and you're rolling up and red volume comes in, you better watch out. Pull your stops up. And that is done automatically in Hawkeye. It protects your positions by understanding the volume. So let me tell you what the webinar special is. Hawkeye Volume Indicator is available in 3 platforms, MT4, TradeStation, and Ninja. We'll also extend this out to the eSignal. If you want to have it in eSignal, we are virtually complete in eSignal programming. You can reserve a copy. Just send it to Team 1 at Hawkeye Traders. And then we will be doing multi-charts. We sell this indicator alone for $360. That's what it would cost if you had it as a buy alone and didn't come to this webinar. I'm doing a private group mentoring session. Randy has told you the date. Randy, could you send the date out to everybody again, please? Where I'm doing a 2-hour special. I charge $500 an hour for my time. So that's $1,000 value right there. And I'm showing you how to use volume with a very simple methodology called 6 ways a market moves. Trend up, trend pause, congestion entrance, congestion, congestion exit, trend reversal. That's all a market can do, and the volume will show you exactly what your phase of the market you're in. So that's the total value of $1,360. If you buy it today, it's $97. And I think that you'll agree that that's a fantastic offer. That's probably going out for a steak with your partner and a good bottle of wine. So it's not a fortune. So it's $97. There's a link. You can click on the link in the chat that Randy has sent out to you. You can come in, purchase this. It's fully automated. And then come and join the 2-hour mentoring that I'm doing in a week's time. These are the platforms we support. As I said, you can reserve it if you want it in eSignal and also in MT4. And if you reserve it, you'll have to speak to us because we'll give you access to the webinar special straight away. So thank you all very much. I hope that I really opened your eyes and ears to the power of volume. I couldn't trade without it. That's all I need if I was on a desert island, was just to have volume on triple time frame. It keeps you safe, it keeps you secure, it makes you money. And to me, it is the hidden part of trading. So thank you all very, very much indeed. And let me now hand you back to Fausto.
Nigel, thank you so much for that, ladies and gentlemen, and hope everyone kind of appreciates and see what we had to offer from Nigel. I think it's a pretty good deal, Nigel, to give obviously being here for that hour and educating everyone a little bit more, but also for the promo you have to offer. So everyone, listen, thank you so much. I hope everybody enjoyed the presentation and hopefully enjoyed Nigel. And once again, this will be recorded. You will be able to follow along if you want to review it on our YouTube channel. And that should be up by tomorrow. And you could also, when you log into your dashboard of CyberTrade University, you will be able to access the recording for that. In the meantime, everyone, don't forget, 8 o'clock tonight, we're also going to continue with our education, and we're going to be picking up with Greg McDermott, going to talk about the Forex market and options and swing trading to continue your education. Always remember what I always taught you. 90% of your time is spent on education, 10% of your time is spent on trading. So you can never, ever not learn something new, and never, ever stop learning. Thank you very much. Thank you very much, Randy, Nigel, and everyone else. See you next week at closing bell, same time, 4:30. And don't forget about tonight at 8 o'clock. Goodbye, everybody.